Good afternoon. Ira Epstein of Linn Associates with your agriculture update for this Monday, April 29, 2019, 2:53 p.m. Central Daylight Time. Well, you can see the wheat, soybeans down, corn up a little. Let me tell you, this weekend in Chicago, we were all sitting here looking out our windows at a major blizzard hit the city. There's nothing more you could say about it. 700 flights canceled at O'Hare and the Midway airports, or more than that. A lot of snow. It depends how far north you went. But the point I'm making is that it keeps delaying the planting. Now, I haven't seen the exact planting numbers. I'll get those in a little bit. I'll probably write about them tonight in my research. But I would assume it's putting corn back a little bit, and what doesn't get planted in corn probably makes its way into the bean market if they can't get it planted in what they deem enough time. It's raining. It's been raining all day today in a great part of the Midwest. Supposed to be more of that tomorrow. So we're looking at saturated fields. In the stock market, it's going to be a week where there's a lot of earnings reports that finishes up. We get like a peak in it right now, and then a lot of first quarter data out of Europe, out of China. We're going to get a lot more information. We'll be digesting all this as time goes on. So when you look at the soybean market, you can see how the market has sold off from this 925 high close, and now we're back to 847, roughly 80 cents lower. That's quite a drop that the market's had. You can see how this drop continues down in here. Still no news on the U.S.-Chinese trade deal. Tomorrow, April 30th, our team will be in China, and then after that, next week, they're due here. Larry Kudlow said we're still weeks away, so gives you an idea. They have not worked out a lot of the key parts, and they won't do a deal that is only halfway there. They want a deal that's pretty well comprehensive. As we take a look at how the swing line is, you can't get away from the fact that you've had lower highs, lower lows. You continue on with that pattern. You're well under the 18-day average of closes in red, and that number is 896.5, and now what's starting to happen is it's going to get underneath this number right here, which was 896.75, and what that does to the market, it means that even on a sharp rally, you'll have a zone where the market has resistance below the last swing line if the chart pattern stays this way. The other part of the market that's happening is the market went to the left-hand side of the Bollinger Band, moved over to the right, and that's where you're at right now. This has just been a thrust to the downside, and after the market went a bit sideways right through here, and as many of you know, I've been out of town since I had a personal problem with my family. The market was coming down, and it accelerated itself, bounced back in right here, and this last week is when the market let go. And we're still feeling the impact of the let go right now. It hasn't changed. In terms of momentum, one of the strongest indicators that I use, at least, is called a slow stochastic. And the reason I like it is not only does it get overbought, oversold, but it tells you if a trend is getting stronger or weaker. In this case, this trend is powerful to the downside. That happens when the blue and the red, the K and the D lines as they're called, go under 20 and stay there. It tells me that on good rallies, the market is still looking for sellers to come forward. If the red line closes over 20, that would lead me to think that price and the 18-day average are going to make a run at each other. Right now, I'm getting none of that. So bounces are just that, bounces and no more. In the meal market, the action today confirmed that you've got the lower high, lower low pattern. If I take this away, if you take a look at Thursday's low, that was 303.40, and on Friday you had the outside day down. So that gave me the pattern of lower highs, lower lows, and it's just confirming it today. Unlike soybeans, it's not an embedded reading. It's a market that's oversold, has hit its downside target. Now the question is, will it get a bounce like it did here? And I realized, one of the things I say is the first challenge of the lower Bollinger Band often sees the pros come out and they're looking for a place, if there's a trend, to replace it. Well, you certainly could have done it there. I'm not saying they did or didn't, but that's how the market's acting. To see soybean oil give you a bounce today should be no surprise at all. You were under the Bollinger Bands on Friday. You were under them on Thursday. You were under them on Wednesday, and you were under them on Tuesday. You had 4 days in a row under them. It's very rare to get 5. You can get it, but it's rare. So I still say that, in this general zone, the first time it hit it, the market broke away, and now it's coming back into those areas again. The difference is you're oversold. You can get more of a rally in the market, resistance all the way up at 28.90. In the corn market, seems to be a run the market's trying to do once it lost this. Now, if we come together and we look at these numbers, both numbers were under 20, right? And that was last Monday, a week ago today. They were under 20 on Tuesday and Wednesday. That's an embedded reading. When and if you lose the embedded reading, it occurs by generally the red line first getting over 20. In this case, they both did. That often, the word is often, leads to price and the 18-day average making a run at each other. And that's what you're getting right now in the market. It's not a trend change. To negate the trend, you got to take out 367 3/4. That would not start an uptrend because you'd have a lower low and a higher high. But it would, at this point of the market, end that phase of the market. The sell zone is 366.5. That's where I think the pros are coming into the market. In the wheat market, you still have what we call that embedded reading. And as long as you get the embedded reading, and I realize, a lot of people look at this, even though you got under these Bollinger Bands, you get your pop, I still say the pros are selling the market short. And I still say they are, and we'll see if they can drive it back down to the lower Bollinger Band. What would be the warning sign in this market that something's changing? Taking out today's high, because it's an outside day down, with the combination only of changing that red line and getting it to go back over the 0 number, 20 number actually. In looking at the sugar market, it's the first time out of this sideways action in a while. We've been hitting highs and lows of Bollinger Bands where you're trying to push the market down. Once again, you're oversold as you're trying to do it. The difference this time is you've got 2 levels of strong resistance, the 18 and the 100-day average, and on hard rallies, they may be a point the pros look at. What bothers me is I don't see professionals selling in oversold conditions, the first challenge under a Bollinger Band. In the coffee market, you've got a pattern of a higher high, a lower low. It's just back and forth. The one thing that's been very evident is the resistance at the 18-day average of closes. I view the market right here as sort of trendless, fighting the battle at that 18-day average. In the cocoa market, you've come off, and if you take a look right here, this was last Wednesday. You made a run to the lower Bollinger Band, held it. Now if you come up, the first resistance, 100-day average, secondary, the 18-day average of closes. This was the action Friday. The market has gotten itself away from being oversold with both numbers back over 30 in the slow stochastic, and you're at an important zone right here. So we'll see if the market comes up any further. If it takes out this number, 2413, while it negates the pattern of lower highs, lower lows, it doesn't start a bullish pattern because let's assume you go straight up to do that tomorrow. I'd still have a lower low and then a higher high. Nah, I think right through here is where the market wants to stall a little bit. In the cotton market, the trend had been down and the market reached the downside target today. It hit its lower Bollinger Band, might get to the 100-day average, can even go lower. It's got that seasonal time of the year that I explained to you last week where it's often in a weak status, and that's what's going on right now. Cattle market, wow. Look at how this market has gone from 123 down 10 cents. It's a huge drop. It's what, 9% or so. That's a big time drop in this market. It's a bit ahead of itself on the downside, closing under the lower Bollinger Band. But even if one wanted to get short, where would you put a stop? Way back up, 8 cents above this? I don't think so. It's an awful lot of risk. It's just a market that fell out of bed. Same in the feeder cattle. Since the cattle on feed report, these markets have just been going down. And in the hogs, while it's a drip down, I still contend that when you look much further out into that December and into 2020 timeframe, the Chinese need a lot more pork down the road. This became what I call a crowded trade, where there were every day we'd hear in the news from the African swine fever as to how many hogs losing 30-40% of their pork population, what China has to do. We're at a zone right now at the lower Bollinger Band where I think the pros are covering their shorts here. You're oversold down to that number. Could you go lower? Sure. You can go down even to the 100-day average, but you're at a zone that I'd be a bit cautious about. You know, one of the things that you obviously like is technical guidance. If you're watching this show, that's what this is all about. And as you know, we give you volumes 1 and 2 of our Guide to Technical Indicators. These are PDFs. If you go to our website, you'll see our carousel of free offers. Yes, this is there. I know that one of the times, a week ago or so, it had come off somehow. It's back up there. You can choose these if you'd like. We email them right to you. So if you like them, you get them. It covers all these different subjects. Each booklet's about 23 pages long. When you print it out in full color, it looks just like you're seeing here. I think you'll find it well worth your time and effort to brush up. How do you get it? Give us a call or go to our website. You can sign up there. We'll get it to you. You can always click right up here if you're watching me on YouTube. I'm Ira Epstein. You have a good day.